Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, December 2nd, just after the close. I'm with the Moose, John Mousseau, President and CEO, Director of Fixed Income. Busy week in bond land, busy week in equity land as well. But let's let Moose get started first with the Powell comments and what he saw. What did you see in fixed income, John?
Matt, what we saw was certainly a change in tenor. And when Jay Powell came out with his comments, it almost sounded like they were more in line with the comments that he probably should have made given their verbiage back when they actually did raise rates 75 basis points a month ago. He did acknowledge that there's been some slowdown. He did acknowledge that they will start to look to be a little more judgmental in their hiking of rates. He doesn't want to disavow you of the knowledge that rates are still going higher in the short term. But he did give you the room to think that those rate hikes might be tempered a little bit, which means at some point they could be looking for a pause. They could be looking to talk about maybe having a pause down the road. It says to the markets that, boy, we've seen enough slowdown in economic activity in general. We've seen some relaxation of inflationary concerns. You wouldn't know that from the jobs number today, 260,000. The job came up, surprised everybody. The long Treasury bond was down 1.5 points this morning on that news. By the end of the day, it was up a point. What does that tell you? The bond market now has a vision of we're slowing down, and that's why we're willing to accept longer bond yields that are much lower than shorter bond yields. And that narrative, nothing has changed.
Yeah, and I guess you could say to some extent, what Powell was trying to get across is that there's been a ton of heavy lifting already done.
Absolutely.
And now they can at least pay attention to data without maybe a panic within their decision making. So, trying to catch up. Maybe they've got to a point where they can take a breath and just let the data lead them.
That's true. And we know from the language back when they actually hiked rates that there's other voices in the room in the Fed that are basically pointing towards a little bit of moderation, which is another way of saying is we don't have to take out the sledgehammer every time we're going to do a rate hike, not another 75. So, and the other way you have to look at it, right, is when you're down at 1% and you're raising 50 or 75, percentage-wise, that's a bigger move than when you're already at 4.
Sure.
So, I think that's kind of the market digestion.
Yeah, and the muni market, we talked a number of times, John, had gotten deeply oversold in late September into October. We're throwing around, you were seeing the 5% coupons in new issue deals.
Crazy.
That just looking at some of the broad muni indexes, you had a nice 5-6% price rip higher in munis in November. You put a coupon on top of that, and that's pretty attractive.
It is attractive, and a lot of that came basically all from November 10th on when you got the better CPI number. And we'll get another CPI number in the middle of this month, and hopefully it continues.
Yeah. It's interesting. What John also gets to the point there of positioning. And, over and over and over again, we talk about positioning on these videos. It's not so much what the news is, it's how the market is positioned for that news. And on the equity side, we saw extreme negatives in positioning. And the first rip higher was the CPI number, right? Back 2 weeks ago or whenever that was.
Yep, remember that.
And then just Powell moderating his language this past week created another rip higher. The positioning was so negative in equities, regardless of what people were saying, the actual trading was negative. And we had a comment on our video last week. I had been focusing on the unbelievable put-call ratios over the last 30 days.
Sure.
That when FTX melted down the day before the election, don't forget, those are two big headlines, right?
Absolutely.
Beginning of November. Put-call ratio hit, I think it hit 130. I mean, there was a 114 and a 130. Remember what a put-call ratio does, folks. That is giving you an idea how people are betting in the options market in terms of a move higher or lower. And when we look at the equity-only put-call ratio, not the broad index put-call ratio, but bets on stocks, equity only, that's where you see real emotional betting. And when we get that high on a put-call ratio, that many people sure that the market's going down and positioned that way, you get these kind of rips. Now, let me bring up a chart, because as you know, when I look at the markets, good or bad, and we're always missing trades, as I said, we're always kicking ourselves, but we make solid trades based on data also. Take a look at this chart. If you recall, back 2 months ago, we talked about how negative the weekly momentum had gotten in the New York Stock Exchange. And that's the chart you're looking at. There were only 6-8% of companies on the New York Stock Exchange trading with a positive weekly momentum.
Like nothing.
You rarely see that. If you look to the left on this chart, that's the last few years, you see it happen 2-3 times. When you get that negative, you set yourself up for any little bit of good news, or more important, news that's just not that bad.
Right.
So we pay an awful lot of attention to it. Look at today. We've had this move higher. You've had a couple of pushes up to the 86, 88, 90% positive momentum on the weekly momentum ratio. Here's where we get a little bit nervous, right, shorter term, about committing capital. This is, if you're committing capital today, you're in a little bit of chase mode. You've had that momentum turn down. It's not the end of the world. It doesn't mean the market's going to fall apart. What it does tell you historically is when the momentum starts to fade from a high level, let's call it 75 or 80 or above, the market needs to take a breath. The market needs to shed some of that excitement and get a more even base. So we're a little bit, we're constructive on the market, but we want to use a pullback, which I think we may get judging on these momentum charts. And we have cash to look at some sectors that have been working. I know last week I said we would get into some of those sectors and names. We'll do that next week so we don't go on too long. But I thought with some of the Powell commentary, it was important to focus on that.
Absolutely.
Anything else, Moose?
That is it, my friend.
All right. Don't forget to like, comment, and subscribe so you can get every video on Fridays, but just as important, any midweek special reports that come out. Enjoy your weekend.